we have the ability to allocate offshore, and we're doing that currently. But the portfolio is about 80 cents, or 80% of the portfolio is Australia, New Zealand, and that's 75% Australia and a small allocation to the New Zealand infrastructure assets. But we are looking at some really exciting offshore investments currently, and in new sectors as well, which are perhaps less available than in the Australian market, given our smaller size. We're currently reviewing a terrific opportunity with a European telecom tower provider. So 4,500 towers, telecom towers that support some of the operators in mainland Europe. Terrific assets. 40% of the business has got weighted average contracts of 18 years. Those are the sorts of I think new infrastructure that we're quite excited about, and that's an example of going offshore while being disproportionately invested here in Australia and New Zealand. That's a good example of what we would get excited about in terms of those new sectors globally. And then, so that's digital infrastructure, and we think about telecom towers, we think about data centers, spectrum. We as a portfolio had a good look at the mid-band, the Federal Communication Commission auction, the US government's auction in December last year, where they were auctioning off some mid-band spectrum. Had a close look at that. That's another great example of new infrastructure. And then fiber and co-location associated with data centers, we think are some really terrific new infrastructure. And why? It's exactly what we're using now. For example, the spectrum broadband. This whole, I guess, the COVID experience has put us all behind screens and across data waves that have to go through towers, data centers, spectrum, and so on. So it just underpins and emphasizes why that asset class is really compelling going forward. I think we're in a low interest rate environment, which is terrific. I think we've got healthy levels of inflation, remembering that some of our assets allow inflation pass through. So we welcome a healthy degree of inflation, and we've got natural protections around that. We're also in terms of fundamental growth globally, we're seeing healthy levels of growth, and we're seeing significant demand for capital expenditure in relation to infrastructure renewal. And everyone's seen the great numbers that are thrown around in the US. And we'll invest cautiously in the right sectors, so we don't get too excitable about those big numbers. But what it does signal is there's certain areas of deployment that are really attractive, and so that's another area that we're focused on. And then fundamentally, I think, as we touched on right at the start of this, some of the informed institutional investors have recognized, are sending the price signals, aren't they? They're saying some of these listed infrastructure stocks are fundamentally undervalued, and we're seeing some of the biggest transactions ever in Australia, and those big institutional investors are sort of putting their money where their mouths are. So I think those are the sorts of signals that the SMSF investor can look to and say, wow, this is a really exciting time, and what's my mechanism of access to this terrific asset class? So yeah, we think the green shoots are well and truly there. We think some of the noise and the heat's come out of the values, and so we're really excited about the positioning for the next sort of cycle.